Welcome to the scene, it's your host TTP. We're flying high in the crypto sky, you and me. From Bitcoin Rush to Ethereum, we trading all the coins with the trading parody, making that joyful noise. We got bots, we got plots, charts on the big screen. 3 comments to Wick Hunter with a trading machine. Laughing all the way to the bank, it's a fun parade. With every trade we made, watch how we get paid. TTP's got the formula, flipping coins like a spatula. In the crypto game with the vernacular, spectacular. From the morning to the night, we're streaming with the light, trying to trading parody. We'll teach you how to fight, dive into the charts. The RSI, liquidity at a glance, trends on the rise. We never leave it up to chance. All trading tools of the champion breed. With AI and math, we're planting the money seed. Laugh with us, trade with us, ain't no looking back. You're with the parrot now, leading the pack. Alpha profits, snap plus with the crypto law. TTP's on the mic and he's ready to soar. TTP's on the mic and he's ready to soar. TTP's got the formula, flipping coins like a spatula. In the crypto game with the vernacular, spectacular. From the morning to the night, we're streaming with the light. Join the trading parody. We'll teach you how to fight, dive into the charts.
Hello guys, welcome to the Trading Parrot. We are doing a live stream today on Bitcoin. Today we're going to cover the short term. We have seen some developments on the price on the 4-hour. We are starting to put nervous those shorts. We took the CME gap. Things are starting to move fast. And today I have as a guest Matt from Bitcoin Magazine Pro. How are you doing, Matt, today?
I'm very well. Thanks for having me. It's always a pleasure to join you and talk about Bitcoin. So excited for what we have to discuss today.
Yeah, I'm excited too, because this particular episode, we are not just going to focus on indicators for me, but also Matt is going to bring all his arsenal of on-chain data, short-term, long-term. We're going to have a discussion on not just what's coming on in the next few days, but also what's next for 2025, whether he thinks on-chain is looking good. And I'm also very curious to see what he has to say, because we haven't caught up in quite a while. So in the beginning of the video, I'm just going to focus on short term. I'm going to give you an update. We're going to talk about that CME gap that, if you heard properly, there were some noises of people screaming, liquidations at those levels. And we are starting to put those shorts in big risk because we're getting closer to 100K, and that is where we should be seeing some volatility. When we hit liquidations, there's usually aggressive reactions, and I'm already seeing some of that happening, and I'm getting excited. Since the morning, I haven't seen the chart, so we are going to look at all of this live. Let me share my screen and get everything ready. You should be able to see everything. If not, guys, let me know in the comments if anything is not looking great, sounding great. I assume that is all good if you don't say anything. By the way, guys, hit the like and write down comments. The noisier you are, the more you're helping the channel. So I really appreciate that. And we're going to get started first with the 4-hour, because I was really impressed of this recent move. Let's go with the 4-hour time frame on the RSI. And when we were at these lows, I drew this line saying the recipe to get us out of this move down basically is to break above the red line on the RSI 4-hour, followed by ideally not seeing a rejection in here, because the typical scenario is when you break out from this red line is that you go against resistance at RSI, for example, 50, and then you start doing lower lows. So I drew this line to say, well, we need to go against the odds in here, which is not impossible, because really the 4-hour in this whole range, the RSI has been really doing absolutely only fake outs. So I was thinking, well, wishful thinking, maybe we can do a fake out in this and go to the top and start challenging that. And that's what we are doing. We are retesting the breakout from global resistance on the 4-hour, that on the price action looks the same. We did it on the RSI first. That is great. We took the 58 resistance that I talked about yesterday. I left a line in here. I say we really need to close about 58. Interestingly, in this 4-hour candle, we went all the way to 98, and we're seeing a move back down into that 58 I mentioned, which is a little bit, might put some of you a little bit nervous. In my opinion, this is a reaction of starting to hit levels of liquidation that are larger to the ones that we were hitting before. All the way to the upside in here, there were no areas of liquidation that big. Once we took this one at 97.6, that was already green. Taking a green is larger, and the reaction is proportional to that. Imagine what's going to happen if we get into the red. You can get two effects. Either you start slicing this like butter. That's one typical effect of crossing big liquidity. And that is particularly fast if you start a short squeeze. But the short squeeze is not always happening. There are very, very particular conditions to do it. Some other cases, you just see a rejection. And I'm very excited because I really want to exit all this challenge on the 15-minute. And more than anything, ideally, I don't want to go back and put another new low in here based on this liquidity at 93K. We talk about that 93, we cross fingers. This is the fifth time. We took this one, then this one, 3, 4, and this will be the fifth time. So ideally in here, we don't see a rejection. Ideally, this doesn't close like a liquidity hand, and we actually go for 99 into 101. Doing that on the daily puts us in a very good situation. Look at this. On the daily, we are against this resistance that I mentioned in the morning. The move back down from 98 is putting it back below resistance. We do need to get over that, okay? We just pinch it. Longs already taste the blood, and we want to go for further additional move into 55 so we can start talking about a reversal into top of the range on the daily RSI. We have done 1, 2, 3, 4 channels this cycle, and this in here at RSI 42 could be the beginning of a reversal for a fifth channel into 84. But let's not get ahead of ourselves. Step by step, let's first overcome 48 at this level. Let me see, Matt, if I have anything I'm missing for the shorter term. Oh yeah, the CME that we took, people were not believing that such a thin gap on CME could attract the price when we were at 93. And I even thought it might take a little bit longer because we are going so strong to the downside, but really it didn't take that much from Tuesday, and we took it on Thursday. Usually we take less. Usually we do it in the first 2 days. Now it's on Thursday. People continue to capitulate in here. The SOPR is showing us that we are still at the lower end. That means that there is still people closing at a loss. And that has been accelerating all this period. And I'm looking for a move now into the upside with the price so we can start seeing the SOPR in the other extreme, which is where people start taking profits too fast. And let me see if there's anything else I wanted to share on the shorter term, apart from the liquidity, liquidation levels. So I'm just going to hand over to you, Matt, if you have something regarding TA that you would like to share. And
Yeah, sure. Let me just press this. There we go. Let me know if you can see that.
Yes, now we can see it.
Great. So this is just a standard price chart of BTC. And what I'm looking for over the coming days and potentially weeks, even months, is a bit more of a volatile breakout. The past few months, we've seen Bitcoin ranging in just roughly drawn a range from around here to here, let's say, which has been about 3 months. It's been since November. Obviously, we've had a few wicks to the upside and the downside since then. But on the chart, what I've got here is just the Bollinger Bands. Great tool just for measuring upcoming volatility. So specifically looking at the width And rather than using the standard Bollinger Band length, which is usually 20, I've just extended this to 90 to look at the quarterly standard deviation or potential for upcoming volatility. So this white line down here is the Bollinger Band width, and we can just see the Bollinger Bands here. And what I can do is zoom out and see that we haven't actually had a contraction in the Bollinger Band. So they haven't been this close together since, if I zoom out, I keep having to zoom out, all the way back here in 2012. It was about here, the last time we had Bollinger Bands this close together on a quarterly basis. So I think Bitcoin is really ready to have a big volatile squeeze, either to the upside or the downside. I'm definitely
Matt,
leaning to the upside. Yes?
sorry to interrupt you, but we got 3 comments asking for more volume on your end. So if you have any control to increase it, to pump it a little bit more.
Yep. I'll increase it just while you're talking. That's pretty much all I had to say on this element, just in case you're expecting any volatility. And in the meantime, I'll fix my mic.
Yep. So yeah, we've been seeing, guys, in the short term, quite a painful period to trade because of the lack of volatility. That 97 was driving me nuts, really. In the meantime, I'm gonna show my screen while you fix your audio, Matt, and you just let me know once you're done. And this is another chart that I wanted to share, and I forgot because this is the alpha that comes from the previous megaphone pattern that we trade for 8 months. Once we pinch the liquidity on the downside in here, we broke the support. Notice that I'm doing TA on the open interest, the aggregated one. We had a liquidity hand. We lost support at 15.6 billion. We went to 14.5, and then we regained the support on the open interest. And at that point, I was thinking, I became quite a huge fan of trading the open interest together with the price on higher time frames. And after we reclaimed this, I started calling for an exit from the top. That was a rally from the bottom to top of over 100%. And we were seeing the similar pattern now in this kind of flag or megaphone pattern, whatever you want to call it. But the thing is, this has lasted obviously less than 8 months if we were to exit from the top. But so far, everything is looking great. So we reclaimed the support at 29.6 billion. And we are doing higher highs and higher lows, and the price has just started to catch up with the open interest, and that's a great sign. Remember last week I was saying, also a few days ago, I said that my main concern is that there was a divergence in terms of price versus the open interest. More specifically, in this area in here, the price went down and the open interest went up, whereas we had the opposite in August, in this area, in the area of August 2024. And that was a reason to have just a small warning because of that divergence, just to make sure that everybody understand that the pattern wasn't 100% the same. But it continues to go up. Price goes up now, so it has caught up. It has kind of invalidated the divergence thanks to the price now moving up. But we definitely need to hold that open interest at the 30 and not go below the 29.5. If we go below, then the pattern is completely broken. Remember, in September, we came for a retest 1 month after re-entering the range. So we are allowed to do something like this on the open interest and go just to 29.5. If we break below that, then it's completely spoiled. And if it remains like this, and it exits from the top with the price exiting from the top, it's high likely that we have the equation ready to discover a new range from the top of the price. And that could be ideas of ranges that we could go. I'm going to remind you that we were here in the megaphone pattern. And when we were in this area, the liquidity that we were looking at, we were talking about 70. I think we were even talking about 80, 82. And I was bullish on those areas because they were heavy, heavy, heavy in liquidity. And I got really surprised and happy because the price went to 82 and then it didn't stop. It just went straight in here to 104 and then 109. So if we are here in the equivalent situation, in the similar flag, if we were to break out in here, I talk about 125, 128 when I refer to liquidity on the top end. Just bear in mind that the last time I did that, we went beyond that. So do not be surprised if it's a better, target. Matt, how are you doing?
How do I sound? Any better?
Um,
If not, I can pump it up a little bit more, but fingers crossed that's solved it.
Yeah, I'll just keep an eye on the comments. If you have the comments as well, you can have a
I
look.
can see. Yeah.
If
You carry on. Hopefully they can come in some feedback.
Yep. If you have any other chart on the shorter term, otherwise I'm gonna skip to another one.
I do have. It's not a trading view chart, so we can maybe. I'll save it for afterwards if we do a bit of an on-chain deep dive. I do have some short-term things, but I'll let you finish off this segment first.
Cool. People are saying still quiet and it's a little bit lower now. So I'm gonna cover other charts while Matt works on the new microphone. I think it's a new microphone as well. Let's look at the 30-day liquidation levels. We have increased now the amount of liquidations on the lower end. That is as a result of the move into 98. So longs entering here. We already knew about the 92. We have 93, 95, and now 96.5. On the top end, luckily for us, we still have a good chunk to have additional fun. It's not that the party is necessarily ended. We have 99.3 and followed by some depression in here, which I think I referred to this depression. And then we resume with liquidity at 106.5. So hopefully, if we get into the 100K, that psychological level is not going to be too big of a rejection. Looking at the shorter term on trading different, that gives us a bit of an additional view because this captures more data that CoinGlass. You can see that we have from 98 into 99.5. That is consistent with the previous platform. Then we have this less liquidity between 99.5 and 100. So that is the area that I fear that there could be some challenging. And looking at history and past performance, many times when there are liquidations in areas heavy like this, you hit the first and then you come back and then people ask what the hell happened, why we didn't take that, and sometimes it takes a lot longer to get to the next one. So that's why I always prefer to have the most continuous homogeneous liquidity that we can get. Like for example, in here we are hitting the green, and I wish we had green in here as well to secure the smoothest path, the closest we can get to a short squeeze. In a short squeeze, you get that continuous incremental liquidity where the price doesn't get anything other than going higher and higher and higher and higher, because the higher it gets, the more people gets liquidated, which is just beautiful to my ears at this point in time after having been 2 weeks at around 97K. How would you feel, Matt, if we get into over 100 now? Do you think it's doable?
Hopefully that sounds a little bit better. I
Oh,
think.
wow. That's super
Is that
loud.
too loud?
Okay, that's
Too
no,
loud.
no, no. Leave it like that. I'm sure people are missing you. They want to hear you, so leave it loud.
Okay, sounds good to me. Personally, I mean, I'm an ultra bull on Bitcoin, but if we're looking at on-chain data, I think over the past few months, it does make sense that we've had this ranging price action. We have seen a lot of profit taking from long-term Bitcoin holders, as you could see from the spent output profit ratio and other metrics along those lines, where people who had bought BTC probably at a few dollars, a few $100, now taking profit. Obviously, it makes sense. Bitcoin's done a massive proportion of multiples going to over $100,000. But we have seen over the past few weeks that start to decline a little bit, less and less profit taking from long-term holders. So I am hopeful now that if we can get a little bit of buy pressure in, especially break out of this range with some volatility, that we can hopefully march on towards new all-time highs.
That's great. And when it comes to longer term on-chain data, is there anything that you think is giving a clearer picture of the direction of the price at the moment?
Yeah, so I have a few charts we can share. If I can just find the right button here. There we go. How's that? I'm not a professional like you, unfortunately. Every time I join you, it's a little bit of a learning curve.
No, it's all right. It's all right. It looks perfect.
Great. So here we have the MVRV momentum indicator. Now this is looking at the relationship between the average accumulation price of BTC and the underlying price of BTC. This is usually seen in something like the, where's it gone? MVRV Z-score. What we can do is remove the Z-score, look at the raw MVRV ratio. And then here we're just adding a moving average. Here we can see the 365 or 1 year moving average. And right now BTC is hovering right on this support level, which is typically during bull cycles, if we look at something like 2017, acted as a very strong turning point in the BTC bull cycle. Every time we come back down, retest this level, Bitcoin usually bounces quite violently to the upside. So hopefully we can see something like that in the coming weeks. And alongside that, for a more short-term outlook, if we look at something like the short-term holder MVRV, we are also coming back down very close to this level of 1. Now, this is a similar metric, but looking at just the short-term holders, new market participants, and their cost basis for BTC. And we can see this currently sits at around $92,500. So if we do see a little wick down, that's where I'd be looking for some immediate support. But again, during bull cycles, similar story to the MVRV momentum. As we come down and retest this level during bull cycles, if I just rescale the chart a little bit there, we can see BTC usually has quite a nice bounce from this, almost as a moving average level of support. So those are two metrics I'm watching at the minute that give me a little bit of bias towards some more upside for BTC. And outside of on-chain data, looking at more macro factors, I'm looking at the BTC versus DXY, or the US dollar strength index. Now, this is specifically the year-on-year chart. And what we can see is over the past few months, this has been increasing quite substantially, which alongside BTC increasing is not very typical. Usually these are inversely correlated. So when we see the US dollar strength increasing, BTC is decreasing, and vice versa. So it really shows the BTC strength to be able to run up to over $100,000 and maintain around that level with only a 10-15% drawdown, with the US dollar rallying so hard. We've seen some other markets, traditional markets, potentially struggling as well. Gold has been rallying, of course, in the face of some uncertainty, but we've now seen a turning point in the US dollar, and it's now starting to decline. So I do see multiple metrics and confluence that BTC can hopefully rally higher, both from an on-chain and macro perspective. And as we could see with the technical analysis before, we are very much overdue a bit more of a big volatile move in BTC.
Can we look again at the MVRV, the short-term holders? How does it look now if we zoom in this cycle?
So I'll just have to rescale the chart a little bit, but we can see we are coming back down to retest this level of 1. Now, during this cycle, it hasn't been quite as clean as acting as support. We have spent a little bit of time beneath this, primarily in our range last year, which was 6, 7, 8 months of sideways price action, where we were actually beneath that for an extended period of time. But we can see, again, multiple instances. If I just do this here, for example, and here, where we did actually bounce off of this line when we came down and retested around this level of 1. So we are coming in close to that. Sometimes we don't quite reach that like we did in January of last year. So I do think around here, just anytime new market participants are around break even, it's a good idea to potentially start scaling in during bull markets, or during bear markets, do the opposite.
Yeah, it's incredible, this cycle, how different it is relative to the previous one. I always refer to the one at 2017 as the perfect one. It's that, when you went to school and there was that guy that always had the best qualifications and always a 10 out of 10, and everybody was hating. Well, 2017 is like that. It bounces off every single theoretical level, like the short-term holder realized price. It bounces off the bull market support band, the RSIs, everything. The stochastic RSI constantly above 80 the whole bull rally. And then 2021 started becoming a little bit more of, there are more exceptions. There is no blow of top. There is the COVID crash. Everything got a little bit funky there. And since then, now all cycles, they always come up with something new, some new rule that gets broken. So which makes all this theory, all this pi cycle moving averages that were calculated feel a little bit like they were over, what is it called when you do backtesting, over backtesting?
Like overfitted.
Yeah, overfitted. It feels like those cycles, everybody created things for the behavior of the price, and then everybody traded those things, and it went beyond those limits, and it kind of broke all the rules. But as traders, we should be kind of prepared for that, because now the rules that we are defining now, particularly the rules when it comes to the ETFs, the institutional trading, this is the first cycle with institutional trading. So we're going to create kind of the 101 of how to trade Bitcoin in an institutional environment. And the next cycle, we're going to come stronger and confident of those rules, but maybe there will be new rules. So we always need to be a little bit open for exceptions, I guess, is the takeaway.
Of course, yeah. And just one kind of caveat to that is I actually do think this cycle is quite closely mirroring 2017 from a data perspective, just looking at price action correlation. So of course, last cycle came in and threw a lot of spanners in the works and broke quite a few models. But I actually think a lot of the ones that we maybe are shrugging off due to their inaccuracies last cycle could have a resurgence this cycle. If we just look at the price action and the growth since the BTC cycle lows of this cycle compared to last cycle, of course, there's a little bit of abnormalities at the start here, but following that, we're actually very closely following the trajectory we had in that cycle and are actually still outperforming the returns of that cycle, only marginally, but just interesting to note. So I do actually think that's our most comparable cycle, and if we are to follow this type of trajectory, we could see a BTC peak in around October of this year. Of course, every cycle is unique in its own right, but I do feel like there are some narrative similarities here as well. 2017 was the retail-driven rally where everyone was just coming in onto these exchanges such as Binance, BitMEX, etc. to buy BTC for the first time. Whereas last cycle was more leverage-driven and debt-driven by these big FTX-driven Celsius, etc. exchanges who were just piling on paper BTC, as much debt as they could, and ultimately went bankrupt in pretty abnormal macroeconomic conditions post-COVID as well. Whereas this cycle is similar to the 2017, but rather than retail's buying, this is institutions and sophisticated investors and the largest funds in the world who are accumulating BTC via these ETFs. So I do think it is interesting to note, and I do think this is probably our not most likely path in terms of percentage returns, but in terms of timescale where I could see the rest of this cycle playing out, I do think this is currently my base case, something like 2017.
So you think that 2025 is going to look more like higher highs and higher lows in the higher in high time frames, rather than the 2021 where you get that pause in summer and you get a depression that everybody thinks that was it, and then suddenly we get another rally? Which one are you more inclined to for 2025, regardless of the final performance, just more like the behavior?
I think at the minute we're seeing price action, which for everyday retail like myself and you, price action that's quite boring. Let's be honest. There's a lot of time where we're just ranging and going sideways, and then it's explosive move to the upside, more ranging and sideways. And this stepping up in price action, while quite boring, is actually really healthy, I think, for a more sustainable rally to the upside. So I do think something where we do see kind of this trend of big explosive move, consolidation, big explosive move is likely to continue. I think just due to the institutional inflows, we're seeing sovereign states and funds such as the Abu Dhabi, Saudi Arabia fund, I can't remember which one exactly, buying $500 million worth of BTC, and MicroStrategy buying hundreds of thousands of BTC. I think they're happy to buy and hold for an indefinite period of time. They're not looking at accumulating, let's have 1,000 BTC or 10,000 BTC. They're thinking we need to have 5% of Bitcoin in our portfolios. So I think every opportunity they have to accumulate BTC at a 10, 15, 20% discount is going to see this kind of new range formed as BTC is just being scooped up. And there's not that much BTC coming onto the open market now from miners. So the supply and demand economics are very much in our favor, as long as we don't have any type of black swan or major impact from traditional markets, or who knows what could happen. I think Bitcoin is primed to have a pretty nice remainder of 2025.
Yeah, that sounds good. I think the only things that are kind of making me feel like we could have potentially something similar to 2021 in the middle or at some point is the general markets. I mean, tracking the VIX. I have some theories about that, but I'm going to leave that out of this video. But just in a nutshell, it's indicating once we had this event with Japan, that the VIX, the volatility spiked, I think, into levels of 60. I don't remember. But if you look back, okay, let's do it. Let me share the screen because
Let's do it.
let's just do it. Let's just show it. Yeah, this one. Let's share this one. Cool. So this is gold. And I was talking about gold before. Okay, dollar VIX. There you go. So looking at the volatility index, it's got a behavior that is very cyclical, in my opinion, which is if you look at the actual action here, I'm going to call it price action, you have periods of the economy entering in an area of constraining. There's less volatility, less volatility, less volatility, and eventually you see a breakout. Once you see these breakouts out of this area, there's an expansion, and that expansion doesn't go straight most of the time into a massive peak like in 2008 in that crash, right? We didn't go straight into a collapse. We actually had multiple incremental spikes of volatility before that. And this breakout in here had the same, an initial spike, and then kind of calling for, no, nothing is going to happen. And then you get a spike. That's 2015. And this one that is COVID comes from 2018 into this area. Then you exit, you have the breakout on January, and it went straight into 86. That was really painful. The one I'm referring to is the one from 5th of August. And after we had that, we are now in the period where we are kind of cooling down. And my idea is that between where we are and early 2026, so this range there, I'm expecting a big spike like this. Basically, in other words, I'm saying between now and early 2026, based on past performance and just looking at these patterns, I feel like we could get something similar to this or to that, and that is a market crash in general markets. And the RSI shows me the same, and that's why I'm thinking potentially that could come. And how can we prepare for that? Well, when we were in 2020, having it at the beginning of a cycle, it was scary. And Bitcoin retraced, I think, to 3 point something or 4K, something like that. And then we shoot back up after they started printing money into 65K. And that in a very short period of time, thanks to the money printing. The money printing wasn't an option, it was a must. So my question is, if we got something like this by the end of a cycle, does it just automatically kill the cycle and we just go home? Let's go to a bear market after that. Or do we get the option to get another leg up, like in 2021 that we went to 69? So that is something that I don't know if it happened, and I don't even know if we are going to get this crash. It's just based on past performance and what I see in the patterns and in the chart.
Of course, and I'm definitely not a traditional market expert by any means, but I do have a few opinions on this. So it's not often we get a new US president come in who's already been a US president. This is pretty unique circumstances. So we have a pretty good idea of what economic policies are likely to be implemented and what kind of route he wants to go, which is print stocks higher, really. So we can actually see in 2017 how markets reacted to that. It was actually around 2018, just for the very end of 2017, when BTC topped out in its massive bull cycle. So we could see something like that. And then depending on the follow through after that, we could see something like a double peak cycle that we saw in an earlier cycle. If I just go back to the chart here. So maybe something like this, where we have a big blow off top, and then, like you said, potentially due to quantitative easing or something, we have a big retracement, but then followed by a second peak. Of course, something like that could happen, but ultimately it's impossible to tell. Everyone thinks that the next recession is just around the corner, and there's lots of analysts who have predicted 50 of the last 2 recessions. So no one really knows. I think the best thing we can do is just react to what the data is showing us. And this is where Bitcoin is fairly unique. Looking at the on-chain data we have available, we can just see when everyone is scared and starting to sell, looking at metrics like the value days destroyed or the spend output profit ratio. When people are selling, that's what's going to drive the market down. It's simple supply and demand economics. At the minute, we're not seeing a huge amount of selling, so clearly people aren't too worried. But as soon as we start to see big wallets begin selling, once we see massive ETF outflows, maybe that's some indication that things are about to get worse.
Definitely. Have you got the SOPR chart somewhere? I'm curious what's your opinion on that, because as I showed in the beginning of the video, it was showing quite a lot of panic sellers. I want to know if you have the same impression.
Yes. So am I still sharing screen? Because I've just opened it up now.
Yep,
There we
you
go.
are.
So we have seen a huge spike on the SOPR recently. If I just press this so I can draw, we did see this massively increase higher than we usually do. But I do think that this is slightly warped due to the fact that these UTXOs, taking into account the profitability of a Bitcoin transaction, so it's looking at the US dollar value when it was transferred to and then transferred from, and then just subtracting that. Bitcoin is $100,000 now, so the US dollar differences are considerably more substantial than when Bitcoin was $20,000. So we have seen a lot of profit taking, and this is what has probably limited Bitcoin's upside potential. But if we just zoom in over the current cycle, we can see that this has actually started to decrease fairly noticeably down towards pretty neutral levels, actually, which is very healthy considering where we are in this bull cycle. So I do think there is much more profit taking to be had in this cycle. I don't think just because we've had a big spike that signifies that we've already peaked in this cycle. And the fact that this is now practically at zero indicates that people are thinking to themselves, now's not a great time to be taking profit. Hopefully I can take profit at higher prices, and lots of other on-chain metrics are pointing towards that as well. So I actually think right now we're in a pretty good place. Obviously a few months ago, I'd have agreed with you and said it's a little bit of a warning sign that maybe here we could have a little bit of consolidation. But right now, this kind of aligns with everything else. I'm thinking that the bias is definitely to the upside.
Cool. In my case, what I do with the SOPR, and let me go to the chart. So I squash the SOPR into an oscillator, and I give it a look of RSI so I can see the short term and the spikes and all of that. And I also use percentiles to have these two bands. And that's just giving me a relative picture of whether we are at the bottom or at the top, and that tells me that at the moment there's lots of panic sellers. When we are peaking at the top of the band, it's telling me there's a lot of profit takers. Profit takers tend to mark peaks, and the bottom of the band tends to mark bottoms. And panic sellers all over the place at this range of 95. Every time we put a new low, there were more panic sellers. And that's great. I mean, not great for the sellers that are in panic, of course, but great for the people that are level-headed, using data-driven decisions and stuff like us, right? I see that they are panic selling, and I get bullish. And I see fear in the indicator, and I get bullish. And I see other indicators, and I get bullish. So we do usually the opposite. And I think that's kind of the key. I'm actually thinking that you introduce in one video a way of using the MVRV, if I remember right, the acronym, to trade it in the short term with charts. Are you doing that still, Matt?
Good question. I'm not sure exactly what you're referring to be honest.
Or maybe it was the all indicator, all included indicator.
The everything indicator.
The everything indicator.
The everything indicator. Yeah, so that's a great tool we've publicly launched very recently. I don't know if you can see it on my screen. I've just opened it up. But this takes into account, because Obviously, we're a Bitcoin data and on-chain analysis site, but we understand that on-chain analysis isn't the only thing driving the Bitcoin price action. There's global liquidity, which obviously you're tracking as well. Technical factors, like we can see on the charts, moving averages, etc. Derivatives play a part as well, looking at open interest and funding rate. There's many different perspectives that we need to take into account when doing this analysis. So the everything indicator is something we do use quite frequently, and as I said, is now available to everyone else, which looks at all of these metrics in one by taking into account all of these different factors. So it tries to not overfit anything, they're all equally weighted. And this way we get a more unbiased and data-driven view into where we may be in the cycle. And this is actually pointing us towards being quite undervalued and with a huge amount of upside potential to go in this cycle, mainly just due to the fact that over the past few months, the macroeconomic conditions have been less than favorable. But like we discussed earlier, the tide is now turning, and I do think we've started to see a shift in that. And we are seeing risk on sentiment start to return in traditional markets. If I just very quickly, following this, go to in the macro suite, the high yield credit cycles, this is the risk appetite. This is almost like a traditional markets fear and greed index. This is the risk appetite for high yielding corporate bonds. So we can see during bear markets and less than favorable macroeconomic conditions, people don't want these. People want 1% yielding US T-bills, just the safest things possible. But we can see when there's a risk on, sentiment is bullish. People want high yielded corporate bonds. And when there's a more risk on sentiment, that trickles down into more speculative assets like BTC. It's not speculative to us, but to the big guys, it still is a little speculative. And we can see since Bitcoin has basically been at $62,000, this has been declining, which again really reiterates the BTC strength to surpass $100,000 and still have a very limited drawdown following that. But over the past few weeks, we have again started to see this begin turning to the upside, which really again reiterates the fact that I think we're starting to see a shift in current market conditions and reaffirming our bullish bias, hopefully to see BTC reclaim $100,000 and then retest that all-time high.
When it comes to retail, are you seeing the same I see, which is basically there's very little retail at the moment? And do you think that is, can we get away with another leg up without retail, or are you waiting for retail to come back? I know it's a long question.
No, it's a very good question. To be honest, we've not seen a huge amount of retail coming into the market this cycle so far. Maybe that's people who were burnt last cycle or the cycle before and really need some reassurance that BTC is going exponentially high before they FOMO in. But what we can see is even though we haven't seen a massive retail resurgence, we are seeing enough capital inflows coming in from alternate sources to probably push us higher. Like we can see with the ETFs putting in billions and billions of dollars. Same with MicroStrategy. This chart here is looking at the capital flow of money into the cycle when looking at new market participants of less than 1 month, which is the red band here, and those that have been in the market for about 1 to 2 years. So what this allows us to see is the disparity in the price paid for BTC. This is looking at the influence on the realized price. So what we can see is when this blue band goes exponentially higher than the red band, it means that those that have held BTC for 1 to 2 years are having a much bigger influence on the price appreciation or depreciation of Bitcoin. And when this is very low and the red band is incredibly high, it indicates that new capital is flowing in. So even though we haven't had this retail resurgence, we haven't seen a huge amount of new wallets coming in, new capital flowing in from smaller participants, we have still seen this spike massively to the upside, because when BlackRock are buying $40 billion worth of BTC, you don't really need these small fish coming in and buying, a few hundred Satoshis.
Yeah, that's true. Well, the effect, although this video is specifically about Bitcoin and not the altcoins, but the effect of retail not being here definitely is affecting more the altcoins than Bitcoin. We all know that. But with the increase in the global liquidity, and that could change things, not just for Bitcoin, which has had already a great rally into over 100K. But when it comes to the altcoins, it really depends on that liquidity getting into everyone's pockets, so everybody can buy those alts that institutions, they buy, but not as much as retail, in my opinion. So do you have at the moment any chart showing something like this?
So not particularly. This is just all Bitcoin focused, but if we were to go to TradingView, we'd have a few things we could show.
Sorry,
But yeah,
I didn't formulate
oh,
properly
like
the question.
the liquidity.
The liquidity, the global liquidity,
Ah, yeah.
and sources of liquidity into the system, or crypto, or macroeconomy in general.
Yeah. So this is the global M2 versus BTC year-on-year chart. And yeah, basically, when we see BTC outperforming, it's mainly driven by the fact that there's a huge amount of fiat currency flooding into the system, cheap money, cheap debt available. So what we can see is here, when this is massively increasing, this blue line indicates that the money printers are going, global economies are flooding their systems full of newly printed fiat. And typically, this creates a divergence in the supply and demand economics, not just of Bitcoin, but of fiat currencies. If the supply is increasing and the demand is staying the same or even decreasing, then people look to move out of these fiat currencies, which are depreciating in their purchasing power, and look to hard assets like BTC. But over the past few months, again, similar story to the high yield risk cycles, this has been declining, which hasn't been great for BTC and has definitely limited our upside potential, and hasn't actually had a big turn to the upside yet. But I still think the macro trend of this metric is very much to the upside. Even though it's been declining for a few weeks, there's still a good indication that we are still in the midpoint of a 4-year global liquidity cycle that we've historically seen. And again, it's not often that you get the opportunity to have a president come back into office and give you great information on what's likely to happen next. So if we look to 2017 around here, we could see that the trend in M2 was very much to the downside, again, very much to the downside. And then once the inauguration happened and a few months of takeover had taken place, we saw this again rapidly ascend to the upside. So it wouldn't surprise me to see this flatten out over the coming weeks and months before rapidly increasing towards the tail end of 2025.
Yeah, and hopefully it happens before we end the year, so we are still in a topping year. Because I wonder what happens if liquidity starts increasing, let's say in 2026, because we are all used to the cycles and to everything written like a script, right? End of 2025, you need to sell everything. 2026 is the bottoming year, and blah blah blah. But what happens if the liquidity, the global liquidity index, in a year like 2026 starts increasing massively? And what could be the effect on a supposedly bear market of incrementing the liquidity at that point? I don't know.
If that happens, we probably do get a double peak cycle similar to what we saw in 2013, where we see BTC rally to the upside, have a little bit of a drawdown period, a mini bear cycle, if you like, and then following that, see a second cycle. If we just go quickly back to this chart here, if we were to see something like that with Bitcoin rallying in 2025 and topping out, and then a huge resurgence in global liquidity, then I think this is probably our baseline of what the cycle plays out like. And I know this cycle is quite different in terms of time scale, but we could see something where BTC tops out, has maybe 6 months or so of consolidation until enough liquidity re-enters the system, which gives us enough fuel for a leg higher.
Yeah, I feel sorry for people having to trade that period, because it must be really devastating. The drawdown from the first peak is huge. It doesn't look huge, but it is almost like losing all the value if you buy. Of course, if you buy at the first peak, and then suddenly you see that you are, I think it was like 60% down or 70% down from the first peak, the drawdown, and then it does another 2000% to the upside from bottom to top. If I remember right the numbers, I
Yeah,
might
it's
I might.
brutal.
It's just crazy. But well, those are the days of Bitcoin behaving like a meme coin. And now we are getting a little bit more of a teenager, we could say, of Bitcoin. And eventually, if we get into the era of Bitcoin becoming actual gold behaved asset, then we're going to see a Bitcoin that's going to be quite boring. You know, and people are, what is it called? This guy that criticizes Bitcoin all the time and that he defends
Peter
gold,
Schiff.
Peter Schiff. He's going to be really happy because he's going to have a twin brother of gold and the same kind of boring behavior that he seems to love so much.
Yeah, I could definitely see that. And I mean, we've started to see that happen already, just looking at Bitcoin's volatility. It has definitely been on the decline, and that makes sense as the market cap has increased exponentially. And definitely as we start approaching a market cap similar to gold, that trend's definitely going to continue. We can see the volatility of Bitcoin here has just been on a slow decline for a number of years now. Of course, we've had an uptick recently, but I foresee this trend to just continue indefinitely as Bitcoin continues to grow, which would make it slightly more boring. But hopefully at that point as well, Bitcoin can become its own asset. We've still seen over this cycle the correlation with US equities, specifically the S&P 500, be incredibly high. And BTC deserves its own bull run. It deserves to decouple and be its own unique asset. So hopefully at that point, even if it is boring, it's at least original in its own right.
Yeah, it's true. I'm gonna show a bunch of a couple of scary charts, and I know no one wants that, but some people want to be aware of what's coming on. Um, and one of them, I'm not sharing my screen, is this one. And you remind me the volatility because I have this model here using the Bollinger Bands width, and I place this inverse parabolic thing, touching all those tops, 13 and 17, then 2021. So it's kind of a projection expecting the volatility to peak at 3. And we are quite far from that. We actually peaked in May 2024, the volatility. Since then, the volatility has been coming down. And previous cycles, we had that thing of the volatility coming down and still peaking later. In this cycle, it was just up, up, and up, and up, and up. That's the perfect student in school that never misses anything. Just up. Then in 2021, you get this one that's also only up. And then where we are, which is kind of like a camel shape thing. We peak at 1.7 and then at 1.8. And now we are doing a lower high with a potential pivot at 1.6. So we are still halfway towards peaking in terms of volatility at 3. And if you look at the RSI at the same time, we also see diminishing momentum, not just diminishing volatility, but momentum as well, which are two separate things. And I was expecting two things in this model. One, to enter into the green, like we have done every time, which is being beyond above 70. And two, to spend an amount of time that goes with the linear regression of how much time we spend above 70. So first cycle, we spent around 400 days, then 300 days, then 200 days. And with that, with a simple linear regression, you get 100. Doing it with proper math, it gives you 92 days. And where are we here? We are about to complete the 90 days of happiness about RSI 70 on the monthly. And that's where we are. And this starts with November, and it's supposedly ending end of February. So that's bad news. But I have some hopium that I've been consuming in the past 3 months while we are in this pattern, trying to tell myself that I am wrong, that we still need to go to 80 RSI. We need to put a nice peak in green there. And that hopium comes from this pattern in here. In 2017, we went above 70 and then back below 70. And on the second peak was the real one. And I think this didn't come from me. It was someone in the comment. So I'm going to give credit. Someone in the comment said, yeah, but in 2017, we had that. And then I said, wow, that's genius. Yeah, that's perfect. And I applying that hopium because I love when he, prescribed me that hopium, and I was very keen to consume it. And I look at this and I say, well, we went below 70 here. We went to 69. So that makes January the first month above 70. And yes, if we are to do 92 days, that gives you February and March above 70. And for those guys that are thinking, okay, so in March we peaked. No, the RSI peaks first. The price does that usually after, not always, but sometimes it does it after. Example, in March 2021, we peak here, but the all-time high is at 71 on this dead cat bounce or technical dead cat bounce. And in here, we have the opposite. We have the first peak there that is in August, and then the actual peak in December. So I'm still looking at this because right now in February, we are back below 70. So that will make the first original idea completed. We already spent 3 months above 70, and we have fulfilled all the time that we can be there. It's a bit scary, but I think we are going to invalidate this, and we're going to go with the Hopium plan. Let me know, guys, in the comments, if you're still around, and if you're still breathing, if you agreed with this Hopium plan that we have 2 more months, or if you think that we shouldn't be looking at RSI and all of this is nonsense and it's not going to really forecast anything. Do you have any particular chart that is in confluence with this, calling for a potential top of the momentum around March, or everything is aligning with a longer extended rally into the end of 2025?
Most metrics are pointing towards more upside remaining. I think some of the more bearish ones are mainly influenced by the selling we've had from long-term holders over the past few months. But in terms of kind of market cycle topping out charts, not too many. I think there is one, but it would have kind of suggested a peak when we first hit 74k last year. I don't think there's too many indicating that 108k, wherever our exact all-time high currently is, was the peak. There's a lot of the distribution was actually quite a lot prior to that. So I think from my perspective, most things are looking good. I do think, like as we discussed earlier, that 2020-2021 cycle probably negatively warped quite a few metrics due to its double top nature, where we saw a lot of metrics topping out in the first top and then having a slightly higher second peak. I don't think that's necessarily going to happen this cycle unless there's unique circumstances like we discussed with quantitative easing coming after that first initial peak. I do still think that 2017 and the prior cycles are what we should be looking towards in terms of price action and how that's going to follow and how the data might look. So of course I'm just fulfilling my own bias here and going for the Hopium side of things, but I do think we again break that trend line you had on that previous chart and what we saw in the previous cycle to go slightly higher.
That sounds promising, and I want to buy the pill, the green pill at the moment. We're just about to finish the hour, and I really appreciate, Matt, that you join me in this live stream. It's always good to get a different perspective that I actually value and respect. So I would love to have you again in the channel for another live stream in the future. So thanks for joining me today.
No, thank you very much. It's always a pleasure.
And thanks everyone for joining us today as well. Thanks for all the comments, the likes, all of that really helps the channel. And I'll see you on the next one. Bye-bye.
Bye-bye.